welcome to BloombergQuint. Hi, this is Nickey. Hindalco has reported a multi-quarter high profits. The consolidated net debt has slipped back to the pre-Algis acquisition level. But what's the plan going ahead? How sustainable are the margins, and what would the company do with the incremental cash in the books? Let's understand from the managing director of the company, Mr. Satish Pai. Hello and welcome to BloombergQuint, sir. I'm going to start off by asking you about the aluminium, EBITDA business, which is at an all-time high of around 1,610 crore, and also the EBITDA margins in 27% were the highest that we've seen in the last 12 quarters. At this given point of time, what can we expect in Q1, and how sustainable are these margins?
So, Nickey, I think that LME from in Q1 is already at a higher level than Q4. So it's true that our costs in Q1 are going to be higher than Q4, but because the LME is now at a much higher level than Q4, I think that the margins and the profitability in Q1 will be higher than in Q4. And how sustainable it is, I think that, supply and demand is quite tight. So people are expecting that LME is going to stay high this year. So I think at least this year we can be reasonably confident that the aluminium margins are going to be very strong.
Okay, so let's talk about your copper division, because the EBITDA for that has, contracted a little sequentially. Want to understand what sort of growth can be expected in this division? Are we witnessing any kind of, margin pressures here on? And also one more thing that I'd like to add is, since the copper prices are hitting to the roof, is there any sort of, plan in mind to acquire copper mines abroad, or any such inorganic expansion plans whatsoever?
I actually think that with copper at $10,000 a ton, it's the worst time to buy into a copper mine, because you'll be buying at the peak. So no, we don't have any plans, because we are not a miner. We are a custom copper smelter. So I think that for us, by the way, Q4 performance was much better than Q3 at 269 crores. So sequentially, the copper performance in Q4 was quite good. But as the copper prices go up, TCRC normally comes under pressure and is much lower. So I think that, TCRCs are going to be low because the mining countries have been badly affected by COVID. The supply of concentrate to the market is quite tight, and the copper demand worldwide is quite high right now because of electrification. So I think that copper TCRCs will stay low, but our copper value chain is much broader than just the TCRC, because we have sulfuric acid, whose prices have been quite strong, if you notice in Q4. There is gold and silver that we extract from the copper concentrate, and the fertilizer. So I think overall copper should become steady. I have to say that we have a shutdown plan for smelter 3 in Q1. So from Q2 onwards, I think the copper performance is going to be quite steady.
Okay, so in that case, you expect some amount of margin pressure coming in for the copper division even in Q1. If that's the case, what kind of contractions can we expect?
No, it's not a margin performance. I think because one smelter will be shut down for nearly 2 months when it's going on. So the cathode production will be less to that extent, so 50% less. So that's why I think that when it's shut down, our EBITDA in copper in Q1 will be nearly half of what it normally is because of the shutdown.
Okay. I would also want to understand about the Novelis division. I wanted to understand what sort of tax credit pursuant to the litigation filed by the Brazilian pertaining to double taxation. That's one of the notes probably that's highlighted in your results. So I want to understand the benefit of this, because the amount is not being quantified on the financials.
Yeah, Nickey, that's because that the court ruling just came yesterday or day before yesterday. So we are still studying the ruling. There's no doubt that it's going to be a benefit to us, but we have to go back to 1996 and calculate the impact of that ruling, which is why it's going to take us some time to do that. But net, it is going to be positive for us, but we will need some time to calculate that benefit. It came out a day and a half ago, so we had to give a disclosure on it, but we have not quantified the benefit yet.
But still a range that we can expect, and when can we expect the quantum to be notified on exchanges, if at all?
We will. I think by the next quarter's earnings, we will be able to quantify it. I don't have a range right now.
Okay, let's further talk about the Novelis division because that division has been doing quite well. In Q4, the numbers were decent enough in the sense that it was a number of around $500 million and above that. What can be expected in Q1? And, with this kind, how sustainable are the margins going to be for FY21? What growth can be expected from the division?
So we have been consistently saying that Novelis now is producing nearly 1 million tons of water, and we are quite confident that we will be able to maintain a $500 per ton EBITDA. And in Q1, we are quite confident that we will be at that level.
Okay, so a little northward to what we've done in Q4, maybe we can expect a 10%, 20% kind of sequential growth in that number.
No. I think in Novelis, if we can ship another million sort of tons, and we are at around the $500 per ton, we are looking at about a 500 million EBITDA. So I think that is what we are guiding for Q1.
Okay. I also want to understand your policy on hedges right now for FY21, quantum, and also what prices.
Quantum is going to be much, much lower than last year because it's a rising LME market. So we are going to hedge much, much less because we rather let the market play out. I mean, in a rising LME market, if you have hedged, you cap your gain. So we will keep a much lower hedge portion going forward.
When you say lower, what is the percent that we're looking at?
I think we'll be around the 25-30%.
For the entire financial year. And how much will that stand for FY20?
So FY20, we were more than 50% hedged.
Okay. And what is the price that this 25-30% level, the hedging?
That's at different parts in different quarters. So I think that, it's all of the hedges are over $2,000 a ton right now. But as you know, LME is running much higher than that.
So any range that you would give, say for example, 10 to 15% would be over 2,000, and then
no, we won't hedge anymore. That's what I'm trying to tell you. Whatever hedges we took, that's about it because it's a rising LME market. We'll just let the market play now. We will not hedge anymore.
Okay, let's talk about your consolidated net debt to EBITDA, right? I mean, that's a significant improvement there. It's pre-acquisition levels to what Aluminium was, improvement of, I think, from 3.83 times to 2.59 in this financial year. I'd like to understand what kind of net to debt EBITDA can be expected for the next financial year. If you could give us a range.
I think that this financial year, we would like to be somewhere in the low twos. That is the target that we have for this year.
That's quite an impressive number. It means that what would you do with the incremental cash on books? Do you have any inorganic expansion plans, or are you looking to increase the dividend percent for your shareholders?
We just increased the dividend, Nickey. We just announced 3 rupees a share, which is a substantial increase in dividend. So that is the dividend rate at which we will stick to now. I think the extra cash we will put it into. So first, we have to do organic projects. We have always said the first choice is doing organic projects, and we have quite a few projects in Novelis and in Hindalco, India, that we want to do. And I think that besides that, we have also committed to another bit of deleveraging in Novelis. They need to, if you remember when we did the investor show in February, we said that this financial year, FY22, we'll be paying down another 600 million of debt in the Novelis side. So those are the applications of cash: organic growth, a little bit of deleveraging, and a substantial higher dividend rate that we have just announced.
Okay, Mr. Pai, what is the Capex plan for the next financial year? And also, are we focusing more on downstream capacities in India now?
Yes, absolutely. So this year in India, our Capex plans are 2,700 crores. And for Novelis, it's between $600 to $700 million. And in India, yes, it's the Silvassa extrusion plant and basically downstream expansion. The Utkal project is over now, so we should be ramping up from July. So this year, most of the money will go into downstream projects.
Okay, and what kind of EBITDA contribution will come in from the downstream units in the entire financial year?
Now, this year, I mean, if you do the projects, it's going to take at least 3 years for the Silvassa extrusion plant to come on stream. So it's going to take a while before you see the result of that Capex.
Okay, so it's pretty much going to be stable at the fairly level that we're looking at for FY20.
Yeah.
So I just wanted a broad perspective for you, given the kind of commodity cycle that we all are witnessing and looking at. There have been incremental news coming in that China's cabinet is now trying to rein in the commodity cycle prices. And we have been seeing some metals tracking under pressure because of this move. With this kind of environment that we're sitting at presently, do you think there are chances that we might just look at some correction coming in because of the China's efforts, or you think it's just a temporary blip in nature?
I don't know, temporary blip, but I think the LME prices were shooting up and they have sort of slightly corrected back since China made that statement. But I think the fundamentals of supply and demand are quite tight right now. And as long as fundamentals of supply and demand are quite tight, the LME is going to be quite firm. Now, whether, what level is it going to be at, we will have to let the market decide. But I do believe that the LME is going to be quite firm this year. And you fundamentally cannot have new supply coming on because it takes time, whereas the demand is quite strong.
Okay, so that's quite optimism, some optimism coming in for the LME aluminum prices. But let's talk about the plan of ESG, because Novelis has spoken incrementally about how does it plan to reduce the carbon footprints in the next 3 to 5 years. Similarly, what Hindalco has in store, I mean, the Indian unit business, how does it plan to bring down,
if you look at our investor deck, we have given detailed numbers for each and every ESG parameters. So we are reducing water consumption, we are increasing waste reutilization, specific energy consumption, which takes the carbon footprint down. We are going to 100 megawatts of solar from 50. So we have given, in our investor deck now, we give very detailed every quarter performance against a set of industry benchmarks on ESG. So we have also communicated, on each one of these, the progress that we have made. I mean, and we have given long-term commitments where we will get to, for example, zero water discharge in all plants by 2025, zero waste to landfill by 2030, zero carbon by 2050, including offsets, meaning that, as a full life cycle of aluminium, including recycling, we will get there. So, and we give performance measures on that every quarter now in our presentations.
Okay, in that case, the last question that I have for you will be relating to, your overall broad plan coming in for the next 5 years. Would you be focusing on something like the greenfield aluminum plant, or it would be margin accretive plants or units that you'd be setting across? Just a broad perspective on that.
So we communicated our 5-year strategy in February when we did the investor show. And we have very clearly said in our capital allocation that we are going to focus on organic value-added products. So our 5-year strategy is based on organic downstream. And we said that, whether it's copper or aluminium, we're going to invest more into recycling, more into value-added products. So that is largely, I mean, over the next 5 years, we want to get whole of Hindalco re-rated as a downstream company so that we get a much higher multiple than we are getting today. And that is based on this organic expansion, no more large M&A, shareholder return, and deleveraging to get the net debt to EBITDA down to the low 2s. So that's our 5-year strategy.
All right, Mr. Pai, we'll leave it at that. Thank you so much for taking out the time.
Yeah, thank you, Nickey.